Welcome, everybody. Can you hear or see me? Want to make sure in the chat. Let me know if you can see me. Morning, everybody on Tuesday. I don't see anyone in the chat. Maybe they can't hear me. Or you're here. You're just not here with me yet. Okay. Can see and hear you. Thank you. I appreciate it. All right. Wasn't sure if this is working or not. Good morning. Good afternoon, everybody. We'll wait a minute or two as we get going. Sounds like you can and see, you can hear and see me. We're going to get going here in a minute. As we get going, please put in here where you're zooming in from. I mean, I know DG is here. Who's DG? How are you doing? I feel like I recognize those initials. We got lots of people, already participants in. Tell me where you're calling in from. East Coast, West Coast, ready for school season, ready for football season. Where are we at, everybody? I got a couple. All right. A couple. In New York City. I like it. Your Yankees beat my Cubs this week. Hello, everybody. Connecticut. Thank you for coming in. I've got a specific subject today that I think is very applicable to everybody here regarding something that most of our IRA investors are utilizing. So dive deep into something that some of you emailed me about and talked about as far as some education on how to protect yourselves in a self-directed IRA, but also how to invest using your self-directed IRA. So I've got some specific information and leave it open for a lot of questions here at the end. So hello, Juan from Bama, from Alabama, I assume. And let's get started. So let me share my screen. Let me know if you can see this. View. All right. Can everyone see this in the chat? Are we good? All right. All right. Once again, happy Tuesday, everybody. Glad you're here with me today. And I could probably talk about a few of these things, as far as, it'd be fun to take a side on is it the, should I be a lender or should I be a landlord? That is one of my conversation pieces for today, and it's come up many, many times. Many of you have invested using your IRA in different asset classes. Today, I want to share about private lending in particular, how I see individuals using their IRA to invest in different deals, but also the due diligence that people are doing, also that I've done, and some of the due diligence that I haven't done, and that I wish I had done. And these are pitfalls as well. I look at them as well as like being in the stock market. I know that usually every time I pick a stock, I usually am buying high and selling low because I am not doing the appropriate due diligence. That could be it. Maybe don't have the right experience. And so that's a lot of the reason why I've always been involved in real estate. I feel like, and from a real estate perspective, I've done pretty well. And I've learned all the do's and don'ts, or I feel like I've learned enough do's and don'ts. And so today we're going to talk about those things. So hopefully you can use this information to make decisions on behalf of your IRA. So you all can see me in the chat. Please ask questions in the Q&A. I'm going to wrap up with plenty of time for Q&A after I get through some of this information I've prepared for you. As we get started, first and foremost, again, at Horizon Trust Company, we are a passive custodian. We do not choose any investments on your behalf. Sometimes we'll have guests and different people that have different content matters. I've even had my son on here talking about insurance and how that's applicable in retirement planning. I've had other individuals talking about oil and gas and notes and Bitcoin and gold. and different real estate funds and ventures. Today, I am going to speak really firsthand on seeing what people should be doing when looking at a note, but also how to protect themselves. So let's first talk about the landlord option or not. Now, you're as an IRA. For those of you listening today and have an IRA with us, congratulations. And for those of you who have not yet opened up a self-directed IRA, you might just need to hear this a time or two, and you might be new altogether. So welcome to our live webinar where we answer questions and educate and give as much as possible. First, I want you to know that 5% of Americans are self-directing. That still happens to be billions of dollars. So of the trillions of IRAs out there, trillions of IRA investors out there, I'm not investors, but investment dollars out there, billions and billions of individuals, again, dollars of individuals are invested in different real estate. I would say one of the number one things that I see at Horizon Trust Company in and self-directing in general are people investing in notes. And they're not necessarily people investing in properties that their IRA owns themselves. So let's just talk about that for a second. As the landlord, you own the property, right? You're managing the tenants and the repairs. You're getting the cash flow, right, in the property. Your capital is illiquid, right? Because when you buy an asset with your IRA, which you can do if you're listening to this for the first time, you can buy an asset with your IRA, a real estate asset. And when you do so, your money obviously is no longer liquid. And it's stuck in an asset, which can be good, obviously, for the upside and also for the upside of the cash flow. But there's also some things that come along with owning the property. If any of you have ever owned, in fact, as you're listening here, who here has owned? Is there a lot of you that have owned a rental property? Have any of you owned a rental property? Put in the chat if you've owned a rental property or currently own a rental property. Anyone own a rental property? Yes? No? A couple? All right. So there's pros to owning the rental property. I think one of the best pros I feel like is the excitement of actually the ownership of the property and creating. There you go, Janet. And you've also invested using your self-directed IRA, creating the value, right? So you can buy an asset maybe under value, or that needs to be fixed and flipped, and or held, but you create the value. This is an incredible opportunity, but it also takes a lot more work. And for those of you that raised your hand saying you own a property inside your IRA, awesome, Janet, or outside of your IRA, that's still work. You still have to put forth the work. The other option is being the lender. Now, I remember in the beginning, my beginning days, I was more, doing the landlord work. I was finding the property, doing all the work for a property because I could not be the lender. My IRA didn't have any money, and I didn't have the funds personally to do it. Now, the lender obviously is in a different position. It's not typically involved at all in dealing with the toilets and the tenants. It's really more a security. It's an instrument where you put up your money, you're lending, and you're getting terms, defined terms in return. And so that's why a lot of people, especially if you got a full-time job and or don't know how to find the properties and don't want to manage them, that's what a lot of people are doing. So as far as using your IRA, if you have an IRA, a self-directed IRA, your IRA can then be the borrower and you can lend on the property and secure it by a note. Then the principal and interest will flow out of the principal will flow out of your IRA, and then the payments will flow back into your IRA. All those payments are either tax deferred or tax free if it's inside of a Roth. You become the bank. Your IRA is the bank. The note is the asset, if that makes sense. Janet, I'm going to keep picking on you because you said you bought one with your IRA. If your self-directed IRA owns the IRA, then your asset is the property. If you are the lender, obviously, the note, when you lend, is the asset. And this is what many, many people, including myself currently now, that's where I find myself most of the time is I'm more on the lender side rather on the borrower side as far as the asset goes. So how the note typically works. The note works is, it is like a promissory note basically that says, like, let's say that I want to lend my IRA, because there's a couple options, right? When you buy a property, you get all the upside, but you also get the downside when there's no tenant in there, when the tenant thrashes the property, that all takes from your cash flow, right? So some people like the note option. In fact, we've got thousands of individuals at Horizon Trust Company that do lending. And the reason why I think they like the lending is because it's more defined term. Yeah, it's a note. There's a note associated with the note, with the loan, and that talks about interest rate. It also talks about the payment schedule. There's also a security instrument. So typically, you want to try to have a recorded lien or deed against the property, and so this is your asset. And you could do a promissory note with no security, but typically you want to have security involved. When you have security, obviously, then if there's a default or problem, it's easier to get the asset back if there's a problem. And you also want to make sure the titling's correct. When you record a lien against the property, when you lend money to somebody, the agreement will basically be in the name of your IRA. So it'll be Horizon Trust Company FBO, your IRA. Then one thing that I think a lot of investors forget is making sure the insurance, the policy names your IRA as a mortgagee and loss payee, protecting your collateral, right? This is important as well. So if the house were to burn down or some kind of event would have happened there, it's very important that your IRA is listed on the insurance. Now, it's not too late to get that done. If you're listening to this and you do have your IRA has, lent out on a particular property, you can get this listed. Now, often I see people maybe invest in a fund or in a multi-member entity. Typically, that entity would then be listed on the insurance, and not each individual. But you can have individuals listed, like each IRA listed on the insurance policies. This is something that I would use to close the gap if you have not done so already. It does happen, right, where there's loss, and then let's say the property's burned down and you're not listed. You could have a hard time getting your money back if you're not listed on there as a payee. So these are the typical, like I say here, the anatomy of a private note. There's a promissory note that describes the terms. There's a security instrument that protects the asset, protects your money, that's recorded against the property. You got to make sure that the IRA is titled, and then there's hazard insurance. It might sound a little simple and/or something that might not be too exciting, but these are some of the pitfalls that people will have, including myself. I've made these mistakes by not double checking and making sure that I have maybe some kind of security or not necessarily guarantee, but some kind of lien on a property. So before you wire your funds, these are some of the things that you should double check and triple check. And again, you can send me a message and say, hey, send me over this PowerPoint. I'd absolutely send it over to you just so you have it in your notes. But make sure you have an executed promissory note, that the title insurance policy is done, that you have a servicing arrangement, meaning a servicing arrangement is how are the payments being made to you. Now, it could just be a check every month from the borrower or its entity, but a lot of times there's a servicing company that actually collects the payments from the borrower, and then that company will do the direct deposits or a wire and or check to you every single month. Make sure you have that loan servicing agreement in place if there is going to be one. There isn't always one. Make sure you have a signed settlement. Make sure that there's a recorded deed of trust or mortgage. We already talked about insurance. Titling's correct. Then before you can wire the money, we get this all the time. We'll have people send to us the documentation. Most of the documentation listed here. Send it over to us and say, please send the money to title. We close today or we close tomorrow. This is probably one of the biggest mistakes, that you're missing this last item on the checklist. You need to fill out a one-page document called the DOI, Direction of Investment, where basically you're directing us, Horizon Trust Company, to follow the instructions to send the wire out on your behalf to title or to the LLC. This is important as well. So make sure that you do that when it comes to investing, using your IRA and being the lender. Now, when things go sideways, now this happens. It happens all the time. There's deals that take longer. Look, in real estate, I've learned, just like the stock market, depends upon the day you want to sell in all asset classes. Look at Bitcoin, right? When did you buy? When are you selling? You got to just make sure that you're staying on top. Excuse me. When you are self-directing, this is you making decisions on behalf of your IRA. It is magical, but also could be the wild, wild west. And I've seen that too, where people get excited about lending in or buying assets and they don't do their due diligence. Or they do their due diligence. I've done all the due diligence before and still had problems. The market still could collapse. The rates could stay too high. A tenant could go in and F up the project. All these things can still happen. Just like in any asset, there's definitely risks involved. So what happens if the borrower stops paying? Look, when there's a missed payment, the clock starts, right? If you have terms, a specific note, when you're lending money, there's typically terms. Now, I should probably stop here for 1 second and just say, and the example, I think, not the example, but, in the chat, Janet, you said that you've got it. I didn't go back to chat, but there's probably a few others as well that have bought an asset with their IRA. If you've ever thought about buying an asset with your IRA, or just buying an asset and borrowing money from someone else that has an IRA, this presentation absolutely applies to you. This is probably one of the most important things that you understand if you are either borrowing money or buying an asset and you want to borrow the money, right? So understanding both sides of the table is critical. So I get so many people who are like, oh, well, I don't need to know about IRAs because I'm not old enough yet to put money away. Not the case, not true. Same thing here when it goes to borrowing money. At some point, you most likely will borrow money. And when you do, understanding these things are very important, especially for the lender/investor that's going to be lending the money. So what happens? Clock starts when you miss a payment. Then there's an opportunity, typically in the note, there's a grace period. And then during that grace period, there's an opportunity to make the payment current. What I recommend when someone's late is you inform them, let them know that the clock is ticking and that they've missed the payment. And then you can also let them know that the grace period has begun, and then late fees and default interest happen. Then typically the next step, there's a default declared on the loans. And there's a default letter that typically someone will prepare and informing the borrower that the loan is in default. Then there's an opportunity for them to make it right. And if they don't, the IRA owns an asset, not necessarily owns an asset, but owns the loan. And the loan, as the lender, because you have security in the property, in most cases, not all cases, but in some cases, you then can enforce the claim against the property and foreclose. You foreclose, your IRA now owns the property. And once you own the property, you can then sell it, and hopefully it's worth more than what your loan is, and therefore this happens often. Not, I wouldn't say it happens 50% of the time. It happens way less than that, but it happens. I definitely see it. Probably on a monthly basis, I see something like that happening where something's late, goes to default. I remember in 2008, every single loan, I had loans out that I bought. All of my loans went to default in 2008. I don't know any loan. I know there was hundreds of millions, billions of loans that went to default in 2008. A lot of loans went to default in 2020. Right? During COVID, lots went to default. So it does happen, and knowing and communicating, I think, is one of the most important things with the borrower if they stop making payments. So the other part of this that I've prepared, I want to share with you. And look, I feel like all these lessons, lifelong lessons I've learned over the years, I've stepped in. I've made mistakes. I've had issues, or I've seen other people make these mistakes. I've seen my son make the mistakes. I've seen really good friends. I've seen veterans make some of these mistakes where they don't totally vet the operator. And so let's talk about that for a second. Great deals will fail with the wrong people. I think people is probably the most important thing, but I would say documentation is very critical. So when things do go wrong, and they go wrong with the best people, I feel like I'm one of the best people. And I remember for many years I've had, especially 2008, just hard deals happen. And so It can happen, but obviously making sure doing all the due diligence that you can do when looking at projects and opportunities is really important. So, track record, character, how they behave when a deal goes wrong. Do they communicate? Do they respond to phone calls or emails? Then the paper. I talk about the paper, meaning the position, the security you're in. How do you actually get repaid when a deal goes bad? And then obviously the collateral, the property itself. Really, when lending and dealing with individuals, when lending to individuals through IRAs, it's collateral based. Yes, you're investing in the person. Yes, you're investing in the documentation needs to be right, but it's collaterally based, right? Because you can lend in someone who's a good person, a good character, but maybe have no assets and can't personally guarantee it. And if the property's upside down, you're in trouble. So being involved in a property that has, good equity in it, I think is important as well. So let me see here. There you go. I'm just looking at here as well. Please send the slides. I'll do it. I wanted to see if there's anything I wanted to stop here and double down on. Frederick, sounds like you've been caught in a similar situation. They stop paying. It happens. Like, look, I'm in different deals I'm invested in. And look, I expect it. I don't put all of, I have my safe money and my safe bucket where I put in my conservative money, and then I have more aggressive stuff and or bigger upside stuff. Some of it's inside my IRA because I don't want to pay the taxes if it, does what it's supposed to 5 or 10 times. Things take longer. Things cost more. Not just, you said biotech there, Frederick. I'm involved in a deal that's I invested in the infrastructure of a new company involved in IVF, and it's taking a little longer. But they communicate on a quarterly basis. And so I know why it's taking longer. That makes me feel better. Yes, the terms they're still living up to, but the timeline's a little bit off. It happens, but the upside still looks good, even though it might take a year or two longer than I expected. The multiple should be really good in the IRA for me. So, documents to request here. Ask for the paper, offering documents like a loan package if you're investing in a PPM, the track record, the background, third party appraisal or BPO, an operating agreement, the terms, financials, proof of funds, references. All of these things can be important. It can be great, I think, that protect you. There's people that pick and choose. You don't necessarily need all of these things, but the more you have of those things, the better. And I think it's pretty easy now to come up with all these things and then use, AI, Claude or chat to help you kind of sift through it. Now, when I get something that I'm invested in or want to invest in, I ask for all these things. I get most of them, if not all of them. I put them in AI and I ask AI. We should probably do a whole AI conversation for another webinar on how you can implement that in the decision making and also the checklist stuff. But as easy it is for me to put it into AI and then have it populate, hey, what are my risks here? What am I missing? What should I be asking? They can be doing the same. When you're going to lend to somebody, you can send them the list of questions, and they can then put those questions into their system and say, hey, here's my 5 questions that Frederick's asking. And hopefully he can give you a good concrete answer. These little things will go a long way to fill your files with protection. When all things go wrong, and sometimes they will, having the proper documentation in place is important. So then when it does go wrong, you can go back to that file and say, okay, I have all the documentation. Let's file a default. Let's communicate with them and let them know what their late fees are so they can make me whole. All these different things. Let's just communicate with them. Communication is always the critical part that I think lenders and or borrowers miss. I'm okay with when a borrower misses certain deadlines if they've told me beforehand, if they're upfront about it, or respond to my emails or questions right away. These things we're talking about today are helping you kind of close the gap to make sure that if there is a problem, you're quicker to get it fixed. You're quicker, maybe the first to get paid, if that makes sense. If they won't hand over any of these things or some of these things, could be a red flag. Ask the hard questions. Track record, the structure, and the loan to value. With the exit plan, that's one of the funny things that I see from individuals is the exit plan, right? So I've seen people say, here, I'm raising this money. We're going to do this real estate deal, and I'm coming all in with my investor group. And then there's no exit, meaning like we're going to hold the asset forever. Well, That's a problem. I mean, that might not work. Um, uh, Let me. I am trying to keep on top of some of the chat here, so I'm going to hit it. And again, feel free to keep asking questions. I'll go. But a BPO is a broker's price opinion. So sometimes you won't. Like for example, there's a multifamily, a big property, or an asset that I want to get a valuation on, but an appraisal takes $5,000 or $10,000, and I just want to get a third party opinion. So that's what a BPO is. So absolutely ask questions though, ask hard questions. What happens if there's a default? What happens? One of the things I've told my son, whenever you get involved in a relationship, talk about divorce now. There's a good chance that, that there will be a breakup. There's a 50% chance in life, right? In not only relationships, but in business, even more so in business, that the business is not going to succeed. So ask those questions. How does it work if it doesn't work out? When do I get paid? How do I get paid? Sometimes being the lender is actually in the better position than being in an equity position, because lenders and debt gets paid first often. So red flags, people saying it's guaranteed. The only thing, there's very few things that are guaranteed besides death and taxes. Life insurance is one of those things, actually. You can actually use the word guaranteed in contracts with several different types of life insurance. If you're pressured, one of the things people have heard, if you've known me long enough, you've heard me say this. I've said no is not final and yes is. I feel like this is one of the best things that anyone can use. What does that mean? If they're pressuring you, or if the deal is just too good to be true, but they're pressuring you to get all this done right away, I assure you there's still going to be a really good deal coming up sometime soon. I see good deals all the time. And so, I mean, of course, we all would love to be in the Uber or space station, whatever, something really early on. Amazon's in the beginning. Of course, I get it. But in general, no is not final and yes is. And once you say yes, you can send your money. If you don't have your documentation in place, could be dangerous. So, keeping the IRS on your side as well. Like I always talk about, the biggest expense out there is taxes. What can you do to avoid paying less in taxes? The self-directed IRA, investing in asset classes, where you're avoiding or deferring taxes altogether, is really important, but also making sure you do it the right way. At Horizon Trust Company, that's what we want to focus on, helping you not make any bad decisions. You can't lend to yourself, your spouse, your kids, or parents. You can't lend to your personal business that you can control. So those are some of the things you can't do. And I more list the things you can't do, because there's so many things you can do. You can lend to your brother, your aunt, your uncle. You can lend to a business partner. I recommend still following all the things that I've put together in this PowerPoint as far as documentation goes and as far as titling goes. I mean, that's number one here, making sure it's titled the correct way. That's something I see that is one of the number one things that people submit to us. We are the fastest processing times, I believe, in the industry. I've seen it. That's why I started the company at Horizon Trust Company. But we're not fast if the documentation isn't right. So if you send us the documentation and it's listed as you're the owner and your IRA is going to lend the money, that's a problem. The IRA will be the lender. So it'd be Horizon Trust Company, FBO, your name, your account number, not you personally. Simple thing, but it's also a thing that will hold you up, because you got to redo the documentation. So that could take a day, and sometimes a day. Everyone starts freaking out. Not doing prohibited transactions, very important as well. And then, you direct. We hold the funds, and so we execute per your direction on where to invest. So getting started as you do this, I'm excited to answer questions and or talk about anything you guys might have on these subjects. But this is one of I would say one of the more boring things. It's more exciting to talk about graphs of, making 15, 30% rate of returns, investing in Bitcoin and businesses. But sometimes we get distracted by the excitement of the property, of the pictures, of the returns, of the hypotheticals, and we forget some of the basics. And so this is one of the things that you, our audience, have asked for. You've asked, do you want to know a little bit more about the details, about what to be careful about what to look out for, about what things to ask for? The more you can gather, the more information you can educate yourself on, the better. So for those of you who have not opened up yet or want to or need to, it's simple. You can open up the right account. We can help you with that at Horizon Trust Company. Get your money moved in there, or you can fund it in a contribution, and then you can direct your funds out to where you want to go. So as I wrap up here and go to questions and answers and have Claudia come on. In fact, we could have Claudia come on here as well. If you've not done this yet, if you want to, if you've always thought about being the lender using your self-directed IRA, obviously click on our QR code here. You've got my email as well. I'll put my email in the chat. In fact, I'll put it right. In fact, you guys will put it. My team's listening here. They can put it in the chat. Email me. In fact, there it is right now. Email me. The other thing, a lot of you have seen, my son and I, we do something called Generational Gains. It's a podcast that we have. It's on YouTube. Absolutely go check it out. I think it's a good perspective, I think, for you. We talk about all things business, but in particular, how insurance and real estate works. Some not, what not to do, how to protect yourself. Like some of the things I talked about here, I give you like real life examples of where I effed up, like what I wish I would have done, or when my son effed up, and we talk about it and what we could do differently. Check out Generational Games for sure. Generational Gains. My son and I talking about different business strategies, what people are doing, how they're investing, how they're using their IRA. You won't want to miss it. But these sessions in particular are for you. Today's feedback came from you guys, and so I love the questions and I love the different subjects. So if you've got any subjects that you'd like me to talk about next time, please put it in the chat as well. And so, Claudia, why don't you come on and see if there's any other questions? I feel like I've stayed on top of some of the questions and comments, and thank you for those questions and comments today that you've put in there. And look, we'll tackle anything there is here today, but we can also wrap up here shortly as well. So, Claudia, did I miss any of the comments or questions? I've tried to stay on it with these slides. And welcome, by the way.
Hi. So I was looking at the questions. Can you hear me?
Yeah, there you are.
Yeah. Okay. I have somebody asking about a checkbook control. Do they still need to do a direction of investment every time that they need to do an investment from that LLC?
The answer is no. Once their funds are in your checkbook then can send the monies. I think the most important when it comes to checkbook control is you don't have to do a DOI anymore. You've only done one DOI to move the money from Horizon to your LLC, but it's really important that you track your books very well. All dollars in and out. Keep very good accounting. That's what's very important when you do checkbook control. But you do not need a DOI. Or DUI or DOI. Either one you don't want.
The DOI would only be, so the actual LLC is the investment. So we'll do the DOI, direction of investment, when we send the money over to the checkbook LLC. And then from there, you are the manager of that LLC. So any investments on there will be in the name of the LLC.
Yeah.
And I don't see any other questions. You guys are welcome to go ahead and put your questions in the questions and answers section or in the chat if you want everybody to kind of be on there.
I think we've answered them all. So if there's any subject matters, please email us and say, hey, I'd love to have, I'd love to hear more about a particular subject or an asset class. If there's an asset class, we can have different guests come on and just talk about it. I'm not looking to pitch any investments. We just want to educate you, inform you. So the more you have, the better decisions you can make. And again, if you listen to my podcast, Carson and I talk about different investments. He invests in things totally different than me. And that's okay. And we talk about it and what he's learned from it. And, and if he's beating me on some of my investments, we're different decades now in our age bracket. And so I'm investing in different things than he is. And so it might make sense for you and or your kids to listen to kind of some of the things that my son's talking about as well in his mid-20s. So anyways, I think that's it. I don't think there's any other questions, right?
I think that's it. No.
All right. Today's short and sweet. Thanks for everyone's time today. And I appreciate it, and have a great rest of your Tuesday.
Have a great day, everyone.